I think you're right. I think the longer-term outlook for inflation is still quite uncertain. A lot of, we don't know much about where oil prices, commodity prices are going to eventually settle down. In our baseline, we assume that they stay high. We are not calling for a U.S. recession, for example, for next year. Recession risks have gone up, but we don't think it's our baseline expectation. So commodity prices stay high, and that will keep global inflation at elevated levels. And for ASEAN, that means that inflation may come off from the peaks, but they will still remain high relative to the historical context and should remain high relative to where central banks want to see them. That brings me to the second question on ASEAN central banks. Where are they? Actually, with the exception of the Monetary Authority of Singapore, most of ASEAN central banks have not reacted in terms of policy reaction. So they risk falling behind the curve in the context of where we are. Increasingly, global central banks are making the focus is shifting towards fighting inflation, even at the cost of growth. And I think ASEAN, by and large, has come a long way in terms of the COVID recovery, and central banks should be getting ready to look beyond growth and look beyond supporting growth and looking at inflation. Not just, people ask, how is central bank hiking going to affect inflation that's caused by energy? But it's beyond that. It's about anchoring inflation expectations. It's about sending a signal that, the policy rates that we have in ASEAN, no longer are warranted given where we are in the growth and inflation cycle. So we do see ASEAN central banks slowly coming around to the tightening bias, starting with perhaps the Malaysian central bank next week. We are calling for a hike from them. And for the other ASEAN central banks, we do see rate hikes from the second half of the year. Finally, just one exception would be Thailand, for example, because I think Thailand has been, big laggard in terms of the growth recovery. So we do think that they can afford to stay on hold for a bit longer.
Do you see in any of these ASEAN economies, Mohamed, the risk of social unrest as a result of spiraling cost of living? And, naturally, if there's social unrest, and that can then lead to things like political upheaval and even further economic upheaval.
Absolutely. I mean, there's a big risk, especially when it comes to food inflation, because food inflation hurts the poor and the lower income more. And in countries like Philippines, Indonesia, Vietnam, food inflation, food consumption accounts for a big proportion of what people generally spend their monthly expenditure on. So it's very, very close to the heart of the people. So it is a big risk. If we do see big surges in food inflation in our region, we can't rule out the risk of social unrest. Having said that, ASEAN food inflation in particular has been a little bit less volatile, more contained than in the past, because we depend a lot on intra-regional trade, and there is a lot of government support in place to keeping food inflation contained. It's not all good news. Eventually prices will have to adjust, and but the hope from the government perspective would be to allow for these adjustments to happen in a gradual fashion. It's usually the big sharp jumps that leads to a lot of unhappiness on the street.
We do like ASEAN countries because they have a very interesting feature. Their economy was hurt in 2021 by the COVID. And actually, when we look at which countries are going to have a higher growth in 2022 compared to 2021, ASEAN countries stand out as the base effect as we go into 2022 is going to be rather strong. So it's one of the few areas on the planet where the 2022 growth rate is going to be higher than 2021, which on the earnings side for equity holders is going to be a positive as well, outpacing the rest of Asia. And then you have mentioned Japan, which has an interesting feature, 10% of a fiscal spending compared to GDP. This is going to hold up the Japanese economy. So these are two areas where we have high hopes. When it comes to China, we need to know further measures. We have a stability measures being taken. It's probably too early to go back into Chinese equities. For two areas stand out, ASEAN countries and Japan for the time being.
Let's unpack China in a little bit more detail then, because last week the topic du jour was really what was going on with the embattled and indebted property names, where we did get, of course, ratings agencies saying officially that they were in default when it comes to the likes of Evergrande and Kaiser. Is this still going to be a risk, and how much of a risk to investors in China as we go into 2022. And there was, of course, earlier this year, a lot of fear about contagion as a result of what's going on in the property space there. But as yet, it doesn't appear as though that has materialized.
True. I think these two cases are a reminder to all of us that we need to be active investors and choose company by company according to its own benefits. I think these are liquidity issues that we're dealing with on specific companies. But as we have heard and seen in the past weeks, some measures were taken so that a few companies' cases do not result in a global credit crunch for all of the rest of the other companies. And actually, we've seen some other companies being able to issue bonds, albeit at a pretty high price. So we see those measures containing the contagion in a few cases where already going into the crisis, those companies have the liquidity issues. So we think for those companies, unfortunately, time is out, and it's going to be difficult for them to recover fully. But for the rest of the market, the recent measures that were taken allow us to think that other companies being in this market to try to refinance their debt will have this possibility, and hence we avoid a major banking crisis. And we don't think that we're going to have a property crisis as a whole in China, but just concentrated on a few of them.
Let's talk about, with respect to ASEAN, you like Indonesia and Singapore. They've been moved up to overweight, and Thailand to market weight.
Yeah, that's right. Really, the big picture on ASEAN is that it has underperformed the rest of the region and indeed the world for literally the last decade. If you zoom out and look at say, a 30-year chart or at least a 20-year chart of the relative performance of the ASEAN sub-index versus the broader regional index, it goes in sort of larger sort of cycles. And we've just enjoyed, quote unquote, a 10-year down move. And we think that's coming to an end for three key reasons. One, because economic growth is actually going to recover and improve next year, in stark contrast to most of the rest of the world. And that's, of course, as the region comes out of its COVID-inspired downturn. Number two, we're going to see monetary policy start to firm. There's a normalization pattern or trend going on globally. And that should be good for the banking sector, which is the largest sector within the ASEAN regional index. And then third, and excitingly, there is a trend towards the digital economy becoming more evident within the overall index. So the key numbers here are that the internet sector is currently 6% of the index. That's going up to 17% in just a few months as greater proportions of various companies are included in the index. And as we have further IPOs or further introduction of digital economy companies, you're going to see the nature of the ASEAN index begin to shift. And that echoes what's happening currently in India, and also more importantly, what's happened in China in the last 10 years and the significant wealth creation that took place as a consequence of that shift. So we think there's a number of reasons to take a more constructive view on ASEAN, and that's why we've done our upgrades.
Okay. Final question before we let you go. You just mentioned there what you've done with India, but also South Korea there. Both of those markets being moved back down to market weight by you?
Yeah, super quick. It's not because we're particularly bearish, but obviously you have to make room for a market as large as China in terms of overweights and underweights, just to make sure that everything adds up. In India's case, it's very simply just a case of valuation. The market's a bit ahead of itself in terms of valuation. I'll give you two statistics. One, the forward 12-month price earnings ratio is about 23 times earnings, which is 2.3 standard deviations above the 10-year mean. And number two, the relative valuation of India versus the rest of the region is just recently peaked at 65% premium. And that's a record high going back as far as we have data. So we just think the market's a bit ahead of the fundamentals and needs to have something like a time or perhaps a modest price correction to allow the underlying earnings to catch up. So we're very positive in India over the medium term, just feel it needs to take a bit of a breather here. And that's more or less the reason in Korea. Korea is really just a function of slowdown and exposure to the global cycle. It's the most cyclically exposed economy and also quite sensitive to the semiconductor cycle, which currently is under a modest downturn. So we kind of stepping aside in Korea until we might look to re-engage sometime in the middle of next year. And all that, as I said, to make room for the upgrade of China.